It's Friday, October 31st, and here's everything you may have missed in business and finance yesterday. U.S. stocks closed lower yesterday, with the S&P 500 down nearly 1% and the Nasdaq down over 1.5%. But don't panic, both indices are still on track for weekly gains. One key driver was the continued reaction to the Federal Reserve's move on Wednesday. While the Fed delivered the expected quarter-point rate cut, Chair Powell's hawkish commentary pushed back hard on market expectations for another cut in December. This uncertainty caused Treasury yields to jump again, it pressured stock prices, and sparked concerns that mortgage rates could remain higher for longer. The U.S. dollar strengthened again, while gold ticked up 0.4%, Bitcoin dropped 3.3%, hovering around 107,000. Following their meeting in South Korea, Presidents Trump and Xi agreed to a one-year trade truce, with China delaying rare earth export controls and the U.S. reducing tariffs related to fentanyl. Both sides also agreed to roll back shipping-related tariffs. Despite optimism around resumed agricultural purchases and potential future visits, analysts caution that core tensions remain unresolved and could reignite trade friction. Big tech earnings have been in the spotlight this week. Yesterday, the market was digesting the Google, Microsoft, and Meta earnings that came out after the bell on Wednesday. Google impressed with strong cloud growth. Google now reaches over 2 billion users with AI features, and monetization looks solid. The stock was up over 2.5% yesterday. Microsoft beat expectations on cloud growth, but fell short of investor hopes for future guidance. Microsoft flagged ongoing capacity constraints through 2026, and the stock was down almost 3%. Meta fell over 11% despite strong revenue. The company shocked investors by raising its CapEx forecast to a notably larger number for next year, driven by AI infrastructure. Other earnings news: pharma giant Eli Lilly soared thanks to its weight loss drugs. Banks, insurers, payment companies, and cruise lines also sailed higher. Chipotle missed earnings and cut guidance for the third straight quarter. Other down sectors included managed care, chemicals, steel, telecom, China tech, and airlines. In other news, OpenAI is reportedly laying the groundwork for an IPO that could value the company at up to $1 trillion. The company is looking to tap public markets to help fund the trillions of dollars it says are needed for building out its AI infrastructure. Futures are currently up this morning ahead of the bell, and investors will be digesting earnings from Apple and Amazon that came out yesterday after the close. Apple reported better than expected earnings, driven by record iPhone and services revenue. Strong product launches and rising margins position the company well for the holiday season. The stock was up 2.3% in after-hours trading. Amazon reported strong Q3 2025 earnings, with net sales rising 13% year over year to over $180 billion. This was driven by robust growth across North America, international markets, and AWS cloud services, which surged 20%. Shares were up 13% in after hours.